Okay, so we're going to wrap this lecture up with how to calculate cash flows from investing and financing activities. So cash flows from investing activities are a three-stage process to determine cash flow. So how do we determine it? Again, we can go into this three-step process, but what I care most about is if it's a long-term asset, then likely it's going to be an investing activity 99% of the time. There's some long-term assets that don't fall in this bucket, but you won't be tested on them in this class. What we need to do as accountants is we need to identify changes in investing related accounts, explain the changes, and then find changes that relate to the increase or decrease in cash. Same thing with financing. We're always going to use this three-stage process, which I expect you to memorize. Find the changes, explain the changes by reconstructing the analysis, and then report the effect. So let's look at long-term payable here. Long-term payables went up by 25,000. Since it's a long-term payable, it's going to be a financing activity, or 26,000, sorry. But then we find out that we retired these notes. It increased, but then we retired them. And so then how would this gain show up? So we have to know that gains are always going to show up in the non-cash activities. Our cash would show up as our notes payable would be this decrease or a decrease to it. And then we paid cash out. We'd also have equity in our financing. So $15,000 increase and $24,000 increase in retained earnings. So the $15,000 increase from common stock could be something as simple as us issuing the common stock for cash. That'd be a very easy one. If we paid a dividend, dividends decreased retained earnings by 14,000. So that's all we're going to do for financing and equity. It's going to be much more simple than our operating activities. And I'm going to do my best to not give you very complex, just want you to understand where to classify those buckets. And as you go through the rest of your classes, you'll be tested more going forward on the complexities of this statement of cash flows. Just don't take the face value of the increases in notes payable.